What's up, guys? It's Ronnie from the Bro Street Trades, and today I want to introduce the new free day trade section. First and foremost, I just wanted to make a video so you can see exactly how I'm taking the trades, exactly what I'm looking for, where my TPs are, and how I'm executing the trades. Instead of just me blatantly just saying I like Apple at this level or something, I wanted to, I want you to be able to visualize what I'm seeing here. Now the trade might pop up. I might post it up pre-market if it's something I really like, or maybe I might post something up intraday. But it might most likely come in this format. Well, something like Apple at demand. I'll tell you the demand level 123.40 to 122.24. I might throw in a supply too, possibly above it as a TP. Or I might, if it's a put side, then I'll say something is in XYZ is in supply. Short it. I'm not going to give contracts or anything like that, but I will say that typically I like between 25 to 40 delta on my day trades. So you can, gauge whatever contracts works for you. Excuse me. But another thing I will add is that some of these trades also can possibly be swung. So what I tend to think of is like this. So if it's Monday through Wednesday, then I get weeklies. But if it's anything after Wednesday, then I'll look to get next week's just in case there's a lot of momentum and I want to swing a few, runners or anything into the next week. So let me just show you exactly what I'm looking for. Jump right into it. So right here on the left, I have the 1 minute chart. On the middle, I have the 5 minute chart. And over here on the right, I have the Apple contracts. So you can see what they were. As you can see, all my screens are in sync, right? So Apple sells off from, the morning, market open, sells off into a demand. Now, without getting too much in depth into it, this is actually a recipe for reversal. This is literally like your A1 setup where something sells off like that into demand. I won't get into too much detail because the video going forever and ever and ever. But so as you can see here, price gets in our demand zone. Now you can get in right away, as you can see here. So you can get in right here on this red candle. So as soon as you've seen green, this is typically your entry here. But this is a better entry because now you know where your stop loss at. Your stop loss would be right here below the low. That's your stop loss because in this situation, you don't want to be scared to get out nor get back in. Right? So let's say your entry was right here. This would have been my entry for sure. 100%. This would have been my entry because I would have got in on this red candle. I also would have known where my stop loss is because if I'd got on this green candle, then my stop loss is below the same candle, right? So I would get on the second candle, or you could just wait for green. You could have entered here, but anyway. So if you would have got in right at that spot, let's scroll over here. So this is the red candle right here, right? So if you'd have got in here and already played it to this high. From right there, that's 12% profit. So if you took $1,000 position, you made a quick almost $1,300. Now let's say you want to play it conservative and you want to do what I like to do a lot of is just wait for the retest. So waiting for the retest isn't bad, right? So I also watch the trade in the 5 minutes. I don't let 1 minute candles fake me out. I look at 1 minute sometimes for entry just to see what's going on in a lower time frame. There could a lot could be told by watching the 1 minute, but I typically look at the 5 minute because I don't want to shake myself out. So let's say you wait for the retest, right? Any one of these spots would have been a valid spot to get in. Any one of these candles. But let's say you got in on this green candle. As you see green pushing up, price is pushing up. As you can see, that's right here, right? That's right here. You have to play this to VWAP, which is always my target. VWAP is always my first TP, especially in the day trade. VWAP is always my first TP. So I'm in here, right? I'm pretty sure this is actually where I took it. I'm in here at like 105 or 106. If you ride this up to the top, boom, right there, that's 18% on a day trade. Yet again, you take $1,000 position, that's $180 in a few minutes. That's literally like 5 minutes. Okay, now you already scalped it once, but hey, you're like, man, it's still looking great. Price pulls down. This is where the 5 minute comes into play. So on the 1 minute, it looks like it's about to sell off. It's about to be gone, right? It's about to be gone. But this whole area is demand. So buyers should be active here this whole time, right? So now this is when the 5 minute comes into play. As you can see, you got one. This is like more of a double bottom here. So this is a perfect situation to get into a trade here. So as soon as you've seen this green candle going green, above this, now you got your stop loss in place. You know your stop loss is this low, which is right here on the 1 minute. It looks like this. You would have been here on this 1 minute candle right here. Let's find where that is on the chart. So it's right here. So the low was 89 cents, right? And these are the 123 contracts. The low is 89 cents. So let's say you didn't get into the high, 97 cents, right? 44%. You would have made 44% on this trade. Yet again, $1,000 position, that's $440 worth of profit. But even if you would have scaled out some at VWAP, which is, like I said, VWAP is always my first target, VWAP was still 21%. 21%. There's no reason to get out of this trade either. Like, there's no selling off. There's no selling pressure. So technically your stop loss, if you would have had a running stop, would have been right here at 37%. Either way, fast forward to the next. Let's just go to the next day. Let's wait for this to load up. On demand takes a while to load up. Boom. These things shot up. You would have made like 200%, or I believe it was. But I took next week's contracts. But give it a second to load up so we can see how strong these zones are. On demand takes forever. All right, so the data has to load in, but price was already up here. There you go. Now it's loaded in. Right, so now we have Friday. Price didn't come down here at all. Let's just say, hypothetically you swung some, so you still was in this trade. As you can see here, there was no reason to get out of this trade. If you was in it, if you just said, let me swing some, you already slapped it, what, 1 time, 2 times, 3 times. You said, let me just hold 1 or 2 just to see that happen, which I tend to do. I hold runners. All right, so markets opens up Friday. As you can see here at the market open, these were at $1.50. If you remember, your entry was at like 105. So 40%, market open, no reason to get out. Still, even before a pullback, you was at 113%. 133%. By the end of Friday, you was at 192%, almost 193% by the end of Friday, right at supply. From demand into supply, you were literally 196%. This will be one way that I'll alert the day trades. So let's go over to Airbnb, which was another thing that was on the watch list. I personally didn't take this trade, but it was on the watch list. I just missed it. I got sidetracked chasing other things. Let me load up this contract pricing for you guys. I already have it over here. Copy. Paste it. So another way I would give the day trade is I would give out a breakout level. Now, the way I play out the breakout levels is almost practically the same way that I'll trade the demand zones, right? So you could take it on the initial break here, or you could take it on the retest. I personally like to wait for the retest. This would have probably been really my entry here, but the retest here, so soon as it went green here, so look at the 5 minute. On the 5 minute, like a perfect retest. On the 1 minute, it looks chaotic, but this right here in this green candle right here. So let's go check the contracts over here. So let's say you got it for $2. You got filled for $2. All right. At the high, that's 48%. These are 0 days, by the way. Almost 50% profit. And even if you would have got filled at the top of that candle, somehow you got filled at the top. You got a bad fill, so around 209, around 210. So you still would have made 43%. Yet again, if you're looking at this chart, there's no reason to get out of this trade. Straight green candles. This one, maybe since it was 0 days, would have stopped you out, but the options didn't. As you can see over here, the options did not move that much. Put an oval here, maybe help it out visually. So your entry was here, your exit here for a total of 50%. So let's say you didn't even catch that. You didn't catch the first entry, man, you missed it. Like, oh, I can't believe I missed that trade, blah blah blah. So boom, you get another entry here. Look at it here on the 5 minute. As soon as you seen this go green, on the 1 minute gave you a nice clean signal. Green bar right here, your stop loss below this breakout level, below the low. You get in this trade, so that's right here. let's say you somehow get in. Yeah, it's right here. Let's just say somehow you get in for 210. Let's just be conservative here. You got it for 210. So even 210. Oh, wrong tool. Sorry. 210. Even from 210 back up to the highs, that's 35%, almost 36% profits. So I'll show you real fast here some of the trades. I don't know how that looks for you guys. A SPY day trade for 8% was actually a bigger winner than an 8%. What happened was I averaged down, I scaled out basically at break even on most of my position, and then took profits around like 25%. So that's actually not right. That's 8%. Abivad 25%, Snap 26, 27%. Apple still holding some runners as of right now, 30%. The Delta trade, that was 19%. That's just some of the day trades that I take pretty much daily. So I hope that I hope this helps. If anybody has any questions on how these should run, but typically I'm going for about 15 to 25%. Obviously, if it's 0 days, they can actually move faster. So if my TP is about 15% on 0 days, I typically shoot for 20%, only because they're more volatile. Typically, the trades work out right away too. So if it doesn't work out right away, then it's probably something strange afoot, such as like the Apple trade. How first it bounced off and then it came back. That right there, that double bottom would have been great. That sell-off when it happened would have probably been a no, definitely would have been a no-go. But as it would have pulled out of demand, I would have definitely took that long again, which I did, and swung those, and now up like 75%. As you can see, once these sell off, they sell off bad. So I definitely, especially because it's 0 days. So I definitely recommend taking profits around 15 to 25%. Like I said, Monday through Wednesday, you can play weeklies. A lot of the demand zones tend to be nice swing zones too. So if you want to just get time and see if how much it plays out, if you want to play the whole demand zone, that could work out too. There's plenty of those trades where I play in the whole demand zone. And stop loss is always below the low of the day. Whatever the low was, use your stop loss there. Don't be afraid to get out. Don't be afraid to get back in. I hope I made all this super simple, and let's get this money. I'll catch you on the Discord.